Hello and welcome to this special segment called MC Pro Stock of the Day with me, Stacey Pereira. In this segment, we bring you some fundamentally strong stock ideas that you could consider in your portfolio. Today's stock pick of the day is Cyient. A quick brief about the company. It is an engineering research and development service provider which caters to end markets like aerospace, defense, rail, mobility, energy as well as mining. The company holds about 67% stake in EMS or Electronic Manufacturing Services business called Cyient's DLM. So what do we see as the growth drivers for Cyient? We do see some substantial rise in the outsourcing of ERD works as of late. Global ERD spending is growing at a CAGR of about 10%, of which digital engineering spending is growing at about 18%. Within this, spends are led mostly by the manufacturing sector, high-tech as well as services-led businesses. Another factor is the growing use of cloud, 5G, aerospace as well as CASE, which is that connected autonomous shared electric, and the sustainability, which are the key themes that are playing out. Now, India is a key beneficiary of this outsourced ERD spends. In fact, Pureplay ERD companies, which include Cyient, are well placed and will reap these benefits. What India is also witnessing is a transition in the aerospace, defense and automotive space. Air mobility is expected to create these new opportunities for Cyient. The upcoming spending cycle or the super cycle, especially on the pending aircraft platform, will also see an upgrade. And if you look at CASE, which is the connected autonomous shared electric, that will continue to drive long-term demand in the automotive space. We are also seeing an increase in the defense spending, especially in Europe, which will go on to support Cyient's growth. Now, if we are talking about it, one needs to mention whether this demand is then sustainable. Well, the energy transition is likely to aid this demand, and AI-led semiconductor revival and project-specific demand in healthcare can also provide some kind of short-term visibility. Moreover, there is strong demand due to carbon neutral goal, this happening through that energy transition. Let's also take you through some of Cyient's deal wins which are in the pipeline, which continues to remain quite strong. In fact, the deal flows in the sector has been quite brisk. And if you are someone who looks at the company's balance sheet, then the Q3 FY24 in constant currency terms for Cyient's revenue growth was about 0.4% on a sequential basis. EBITDA margins also were up by about 16%, which has moderated due to higher SG&A spends. The 8 large deal wins, that is in the DET or Digital Engineering and Tech segments, that holds quite well for the company, and it has a total contract value or TCV of about $136.8 million. For FY24, the EBIT margins also improved to about 200 to 250 basis points over FY23 is what we've noticed, and the order intake is at about $297.3 million, while just the DET revenue, that growth guidance the management has given for FY24 at about 13 to 13.5%. Let's also look at the stock's valuations. It is trading at FY26 price to earning 21.2 times that multiple above its long-term average multiple. With market levels returning to that potential, investors can go on to add the stock, especially on a decline. But are there any potential risks involved? And especially with the IT sector as a whole, those stocks can see tech spend cuts, which could be a worry, and any kind of delay in the deal ramp up should also be a factor you need to be watching out for. With that, it's a wrap. Thanks so much for tuning in.